Good day, everyone. Welcome to the second episode on stock investing for retirees and non-retirees. Today, I'll be discussing the question which many of you might be asking. Are there risks in stock investing? But first, may I share with you some of the comments I got from the first episode? The first is from Miss JD. I had the chance to watch the video, sabi ni Miss JD. Public mo naman, para maraming makuhang kaalaman. We learn from the platform and we learn from our own style as we gain tenure in YouTube. Looking forward to more videos from you. Thank you, Miss JD. Miss JD has a YouTube channel wherein she discusses your favorite Philippine stocks using technical analysis. And she does this every night. It's called Review of Trending Stocks. The second is from Rosessa Chodoro. This is Tita Isa. She said, very informative. Looking forward to your next episode. Next is from Hannah Bernardo. This is really good, Tito, especially like the trivia portion. Excited on the next episode. Then we have Ate, Lisa Crouch. This is Ate Elsie. Benji, I need to have this conversation when I see you in, as my pot is fully invested in the stock market. I have a guardian financial advisor who is the best. Thank you, Ate. Sure, let's talk, but I still have a lot to learn and I don't know everything. Okay? By the way, if you have questions or comments, please leave a message on the comment box and I'll reply to you as soon as I can. I also invite you to subscribe to my channel so you are always updated. I make it a point to read all your comments. In this episode, I'll be discussing two topics: risks in investing in stocks and how to determine your risk profile. But first, I would like to share with you a trivia question. One of the index stocks in the PSE is the utility company Meralco. The name Meralco originally stood for what? A. Manila Electric Company. B. Manila Electric Street Light Company. C. Manila Electric Railroad and Light Company. I'll give you 5 seconds to choose, starting now. Thank you, and congratulations to those who got the correct answer. The answer is C. Manila Electric Railroad and Light Company. The original business of Meralco when it was founded in 1903 was not power distribution but the operation of a railway or tramway called tramvia by our great lolos and lolas, which serviced Manila and its surrounding suburban areas. If you have been to Divisoria and when you walk along Recto, you may notice railroad tracks along the road. Those were the remnants of the tranvía operated by Meralco early in the American occupation of the country. Is stock investing for everyone? My answer is no. It is not for everyone. Why? Because in investing in the stock market, while returns may be higher and while there may be capital appreciation, this activity has its risks. As the saying goes, high returns, high risk. Now let me briefly discuss the risks. First is volatility. The stock market is very volatile, even if your stock is a first liner or a blue chip company. If you are a short-term investor and you think you can make a fast buck out of the stock market, yes, you can, but you have to be equipped with the necessary tools since you can easily lose your shirt. Sometimes not even your shirt, but even your pants. So, the money that you should invest in this activity should be something extra. Next, no guarantee on return on investment. In general, companies that are profitable declare dividends. A company that is profitable, if it has sound fundamentals, in addition to a favorable economic and political climate, uh, becomes a profitable company. If a company prospers, the company earns, the stock appreciates, and shares the profits by declaring dividends. If the reverse happens, it will be a challenge for a company to come up with a profit. If there is no profit, there is no dividend, and possibly no appreciation in the stock value. Further, the declaration of cash or stock dividend is an act of the company's board of directors. So if the company earns a profit, if it isn't declared by the board of directors, then no dividends would be given. Probably just asset appreciation, and that is not even guaranteed. Next, economic risks. The economic weather is not always fair, and it has its downturns. Events such as a global slowdown, an unstable political climate, or a pandemic has catastrophic effects in our economy. Companies in the stock market are not immune to such economic downturns. In such an event, fear grips the economy, and the reaction of people is to sell stocks and hold on to a more liquid asset such as cash or a precious commodity such as gold. In these times, the value of the stock drops, and since there are a lot of sellers, and if the economy is performing well, the opposite happens. Next is regulatory risks. Depending on the business, company listed in the exchange are regulated by government agencies. For example, banks are regulated by the Bangko Sentral ng Pilipinas. Companies organized as corporations are regulated by the Securities and Exchange Commission. Insurance companies are regulated by the Insurance Commission. If these companies violate regulation drawn up by regulatory agencies, they are penalized. The worst penalty that a regulator can impose to an institution is the cancellation of its license to operate. So when a company is dearly penalized because of some regulatory infraction and that information becomes public, the price of the stock goes down. One good example is what happened to ABS-CBN. The company had a cease and desist order from the National Telecommunications Commission because their franchise to use the airwaves expired, and Congress refused to renew the ABS franchise to use the airwaves. So what happened to the stock? It went down. From a high of 24.85 per share, it is now at 720 to 725 per share. And finally, we have reputational risks. What is reputational risk? It is bad news affecting a company's reputation. If bad news hits the company and that bad news becomes public, it affects the company's stock, and in some way, regulatory risks may become reputational risk. Examples are fraud committed by a rogue officer, a scandal involving a high-ranking officer of a company, or a serious regulatory infraction which becomes public. The presence of politically exposed persons among clients of a company may increase reputational risk. Since stock investing has its risk, investing in the stock market would be for people who recognizes these risks. And how do you know if you are fit to invest in the stock market? You have to know what your risk profile is. A risk profile is simply what your risk appetite is. It has three general categories. We have the conservative, the moderate, and the sophisticated profiles. And the third one, the sophisticated, is sometimes called aggressive or high risk profile. If you go to a professional wealth advisor, relationship manager, or account officer in a trust department of a Philippine bank and request them to manage your money, they require you to answer a client suitability questionnaire whose objective is basically to determine your risk profile. This is a simplified risk profile grid. This is not complete. Client suitability of banks are more exhaustive and extensive. This is just for illustration purposes to give you an idea how the banks assess your risk profile. Based on the client suitability questions that I've seen, these are the most common questions encountered. The first column is the profile question, while the second to the fourth columns are the investor profile buckets. So the replies to this question I'll place in the profile buckets. So question 1 asks about your objective. Question 2 is about the amount that you are willing to invest. Question 3 is about the time horizon. When do you need the funds? Question 4 provides your product preference and a confirmation of your investment objective. If most of your replies fall in a certain risk profile bucket, then that is more or less your risk profile. Again, this grid is just for illustration. I may have oversimplified it, but it is more or less how you determine your risk profile. These questions are used as guides for a wealth advisor, account officer, or relationship manager in determining your risk appetite. So what products are suited for each investor profile? As a general rule, these are the suggested products for each profile. You may think that this grid is very restrictive. I'm not saying that if you are a conservative investor, you're just limited to CASA, government securities, and time deposits, you cannot anymore invest in the other products. But this is what more or less your wealth advisor would recommend to you. My advice is simple: know the product before you invest. Don't invest in anything that you don't know, and invest with money you can afford to lose. So, in conclusion, and as a general rule, stock investing is suited more for moderate and sophisticated investors. Some key takeaways: investing in stocks has risks. If you want to invest in the stock market, you have to be aware of such risks. Investing in stocks is generally suited for investors who have a moderate to sophisticated risk profiles. So it's important that you know your risk profile. Invest in a product that you know. Don't invest in something that you don't know. If you want to invest in the stock market, invest with money you can afford to lose. If you learned something on this episode, I invite you to click on the subscribe button and the like button. Please comment on the presentation or topics you want discussed. See you in the next episode, and bye for now.